Hey everyone, welcome back to my channel, Addie P's Real Estate Tea, where today, as promised in my previous video, we're going to briefly discuss housing affordability, how it's calculated, and what that means for buyers entering into the market again, and the future of buyers entering into the housing market to shop for a home. Now, before we get into this video, as you also graciously do, if you like what you hear in this video, please hit the thumbs up button. If you want to see more content like this, please remember to share. Sharing is caring. And also comment below. Let me know what your thoughts are on this video and what other content you'd like me to talk about. And also subscribe to the channel. Hit the bell notification to be notified of future videos if there's anything coming up. I'm hoping to be able to do some more in the coming weeks about the real estate market and some things that are happening right now and where things are going to be going. I do have the May 2021 market report coming up shortly, so you'll definitely want to make sure that you subscribe to the channel. And you already know, if you're watching your girl from Instagram, drop her a heart and show her some love. All right. So basically, with the Housing Affordability Index, the National Association of Realtors, they define that as a typical family earning enough income to qualify for a 30-year fixed-rate mortgage loan on a single-family home and spending more than, spending more than 25% of the income on the payment of the principal and interest of that loan. Now, this information that they draw from is coming from the Census Bureau American Community Survey. Now, they also, NAR also projects that income levels, specifically median family income estimates based on average wage growth, and previous year's actual income growth. All right, so their next report was actually this month on the 11th. So if you all want more details on that report, please let me know. Drop me a comment below. Let me know if you're interested in that information. So basically, NAR compiles this. They drop this information when they drop the housing report every month and say, okay, this is where we're at with housing affordability. This is where the index is. And since the pandemic, even a little before that, but it definitely was not as brutal as it is now, but that affordability index has been going down quite a bit. There are two factors that in my readings and research and so forth that I'm noticing, and even just my observations as a professional in the real estate market, that one is the shortage of inventory that is driving pricing up, that is causing that housing affordability index to dip down and therefore affecting the buyers out here in the market and hence pricing them out, which I'm sure you guys have all heard that term being used more and more now about buyers being priced out. The other factor that is driving housing affordability down for some buyers in some markets is heavier investment and investor activity. And investors are more so big fish like BlackRock and so forth, who have smaller sister companies and so forth that are coming in and purchasing these properties. And for folks who have saved up and are looking for first-time home, those who are looking to build the proverbial generational wealth are unable to do that now because they are being priced out by folks that can come in and drop big time cash on these places. So it's really the competitive edge is just, it's non-existent, because how can you compete with someone who is essentially a corporation, not even someone, but a corporation who is coming in and saying, okay, well, you know what, this house is 250, but we're going to give you 350. No big deal, because they're looking at the long-term effect of renting that. Now, the rental market is going insane because of this, and that's therefore driving rental prices up higher as well too. So that's definitely, a recipe that's not so good for buyers in that sense. Now, there are certain places here, in particular in the Lehigh Valley, where it's hit or miss. There are some times where we are seeing heavier investment activity, and housing affordability is beginning to be a little bit out of reach for some folks. So that's definitely something to keep an eye out on, and to be mindful of. And I think at this point, such advocates, or not advocates, but such folks as Glenn Kelman, he's the CEO of Redfin. He talked about, possible government intervention, which, as much as some of us may not want government sticking their meat hooks into certain industries and so forth, there may need to be some kind of intervention of some sort to kind of level the playing field a little bit more, to make this dream, this hope of housing a reality for some folks. Because like I said, housing has always been a tool of generational wealth. If you have grandparents or aunt or uncle or your parents who purchased a home, say 20 years ago or so, and they're leaving that home to you, they're passing that wealth on. 20 years, the house has appreciated in value. You can either sell it and get the wealth, get the money from that, or you can, in turn, become a landlord yourself and rent it out, or you can move into the home and live there, whatever your heart's desire. But you get my point in the fact that it is a way to build wealth. It is a way to pass that on. And when that is slipping away from you as an individual, as a family, what do you do about that? So again, we definitely have to keep our eyes peeled, our ears open for any opportunities that may arise. But at this point, and I hate to be doom and gloom, but I mean, they're predicting that by 2022, which is just around the corner, if you think about it, we're already a little past half year here, the half year mark. So they're predicting that the median sales price will be over $360,000. So I know, and you think, oh, that's crazy, but it's already here. It's already happening. And we haven't hit 2022 yet. So we definitely need to keep our eyes peeled on these types of happenings. And, let's hope that if there needs to be, that it's not too late, but some kind of intervention to help us all obtain that ability to be able to build generational wealth if we so choose to, and that housing affordability is not a thing of the past, and that it is something that we can all benefit from at some point in time, again, if we so choose to. All right. Well, again, I truly appreciate your time with this video and you all sticking around to listen. Again, if you like what you hear, hit that thumbs up button. I appreciate it. And until the next video, you all stay blessed. Take care.